After reviewing thousands of tax returns, I've discovered that most CPAs are missing these 15 critical year-end strategies. One client saved $38,000 using just 2 of them. Most business owners are missing out on massive tax savings because they're following outdated advice about year-end planning. After helping thousands of clients save millions in taxes, I've identified 15 powerful strategies that consistently deliver the biggest savings. Today, I'll walk you through each method step by step. But first, let me show you why traditional advice like fund your IRA or sell losing stocks is leaving money on the table. Essential business organization for strategies 1 to 5. Most small business owners struggle with basic bookkeeping, making it impossible to make smart tax decisions before year end. By implementing a simple system to track income and expenses, even if it's just an Excel spreadsheet, you'll have the foundation needed to maximize your deductions and minimize your tax burden. This organization is crucial because you can't make strategic decisions about shifting income or expenses without knowing your numbers. The timing of your income and expenses can dramatically impact your tax bill, and December is the perfect time to make these adjustments. Consider delaying income until January while accelerating expenses into December using credit cards. This strategy alone helped one of my clients reduce their taxable income by $20,000. Remember, you don't have to wait until the bill is paid. Charging business expenses to your credit card in December counts for this year's deductions, even if you pay the bill in January. Health reimbursement arrangements, adult child employment, and spousal compensation strategies can transform your tax situation if structured correctly. A properly documented health reimbursement arrangement can turn thousands in medical expenses into tax deductions, while strategic employment of adult children can shift income to lower tax brackets. When it comes to spousal compensation, most CPAs get this completely wrong. I'll show you how to structure it to maximize tax benefits while avoiding unnecessary payroll taxes. One of the biggest mistakes I see is business owners waiting until tax season to think about these strategies, when it's already too late to implement them effectively. The key to maximizing these 5 foundational strategies is starting now, while you still have time to make adjustments and properly document everything for the IRS. Family wealth building for strategies 6 to 10. Family business involvement is one of the most powerful tax-saving tools available, but most people miss crucial details in the implementation. The IRS actually encourages hiring family members, including grandchildren and nieces, nephews, through a specific structure that can result in 0 taxes on the first $13,850 of income. This approach not only saves taxes, but also teaches valuable business skills to the next generation while keeping money in the family. Roth conversion strategies and charitable giving can work together to create significant tax advantages when properly timed. Many people don't realize that a Roth conversion can be structured to minimize current tax impact while creating tax-free growth for decades. When combined with strategic charitable giving, especially of appreciated assets, you can create a powerful tax-saving combination that benefits both your family and your chosen causes. Rental property strategies and quarterly deposit optimization round out this section with immediate and long-term benefits. By acquiring a rental property before year-end, you could qualify for significant depreciation deductions, especially with short-term rentals, where you can benefit from 100% bonus depreciation. Proper quarterly deposit planning prevents penalties while ensuring you're not giving the IRS an interest-free loan. I'll show you exactly how to calculate the right amount. What most tax professionals won't tell you is that these strategies become even more powerful when implemented together as part of a comprehensive family wealth building plan. By coordinating these 5 strategies, you can create multiple streams of tax advantage income while building lasting family wealth. Advanced tax planning for strategies 11 to 15. Intangible drilling costs and strategic 529 plan usage represent sophisticated tax planning opportunities that most advisors overlook. The government actually incentivizes oil and gas investments through immediate deductions of intangible drilling costs, while state-specific 529 plan strategies can create double tax benefits when properly structured. These advanced strategies require careful planning, but can result in significant tax savings for those willing to implement them correctly. Proper 1099 planning and capital loss harvesting must be addressed before year-end to be effective. Many business owners don't realize that failing to issue 1099s correctly can result in lost deductions and penalties, while strategic capital loss harvesting can offset gains and reduce your tax bill. The key is understanding how to document everything properly and time your transactions for maximum benefit. Charitable remainder trusts represent the pinnacle of tax planning sophistication, offering benefits that extend far beyond simple charitable deductions. This powerful tool can help you sell highly appreciated assets without immediate tax consequences, create lifetime income streams, and still benefit your favorite charities. When structured correctly, a CRT can save hundreds of thousands in taxes while creating lasting benefits for both your family and charitable causes. Don't let the complexity of these advanced strategies intimidate you from taking action. While these methods require more careful planning and documentation, the potential tax savings make them well worth the effort for business owners serious about minimizing their tax burden. These strategies represent years of experience working with thousands of successful business owners and entrepreneurs who understand that smart tax planning is crucial for building wealth. While most business owners settle for basic deductions and outdated advice, implementing even a few of these advanced strategies could save you tens of thousands in taxes before year-end. I've seen clients transform their financial futures by taking action on these strategies. And the best part is that everything I've shared is completely endorsed by the IRS and tax code. The key to success isn't just knowing about these strategies, it's implementing them correctly with proper documentation and timing. Remember that tax planning isn't a once-a-year event, but rather an ongoing process that requires attention and adjustments throughout the year. The most successful business owners I work with use these strategies as part of their regular business operations, making tax-saving decisions every quarter instead of scrambling at year-end. I'm committed to helping business owners keep more of their hard-earned money through smart tax planning that's both powerful and completely legal. Subscribe and hit that notification bell because next week, I'm revealing my complete audit defense strategy, plus the one critical form that most CPAs fill out incorrectly and practically guarantees an IRS audit. Our tax code is constantly evolving, and staying ahead of these changes can save you thousands each year. That's why I release new videos every week, sharing the latest strategies and updates that could impact your business's bottom line. Like and subscribe to be notified whenever I share new tax-saving strategies. Don't forget to drop a comment below with your biggest tax planning challenge. I read every comment and use them to plan future content. Thanks for watching, and I'll see you in the next video where we'll dive even deeper into smart tax planning. And remember, tax season might be stressful, but with the right strategies and planning, you can approach it with confidence instead of dread.